Hi, and a happy Christmas to everyone. Today, guys, we're going to be jumping down into XRP, taking a look at what has been going on most recently and what we think is likely to happen next. As I get into this video, smash that like button if you do find it useful and informative, and if you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will stay up to date with all the videos that we do here at 𝗕𝗘𝗪𝗧. And if you have not yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's the first place we go to notify you guys of everything that is going on in this space. So check it out in the description down below. Now, in this video, I am going to be applying Elliott-Wave theory. If Elliott-Wave theory is a little bit alien to you, why not check out the Cheeky School in the description down below. Essentially, it is going to show you the ins and the outs of everything Elliott-Wave theory. There's a few different courses down there, everything from building a balanced portfolio through to Elliott-Wave theory, and even we're offering coaching as well from our team. So check that out if you're interested in understanding what Elliott-Wave theory is in a little bit more detail. Let's jump into this though. XRP paired up with USDT on the hourly chart here, and Binance is our data source. And I jumped the gun a little bit, right? Because I was thinking that maybe this was going to be our fourth wave high. But it does look like we may have now actually achieved it just that fraction higher than this level. So it's a little bit frustrating considering I got stopped out of a short position that I entered. But, you know, that's why we have tight stop losses. So we'll take the L and then we can take a look at what's going on next. I think there's going to be another opportunity shortly. So on that note, let's jump down into this, right? So essentially we are tracking a 5-wave structural move to the downside, where we estimate that the lows are going to be right down here at this 31.95 to 32.72. Now, don't get this confused with any other kind of macro low points. This is just a potential first stab at a move to the downside, and we can't have to kind of consider that maybe all of this might just be a wave 3, then 4, then 5, and we still look at those 28 to 26 cent level, okay? So those macro levels that I've been talking about for a while, they're still valid, but all we're doing here is talking about the micro counts within these kind of larger structures and stuff. So at the moment, it looks like this of area, okay, coming down here at the 31 to 32 cent is likely to be a bouncing position, okay? It's where we see the relief rally of sorts before going down further, okay? So that's all that is. But let's jump down into this, right? So straight off the bat here, we can see that we've come up here and we kind of have this structure, and it looks like it's pretty much there. Okay, and what I want to do is I want to focus in on the most recent movements, right? So where are we now? It is 8 a.m. on the 25th, right? So if we start thinking about this particular structure here, we're going to be thinking where the nested movements are, right? So we can see here that we have this kind of move coming down. We have this low point here. We then come up in 3 to here. So if I were to try drawing on, we would have this kind of micro movement happening right in here, where we would expect something like this. Okay, so what I'm going to do is I'm going to make these micro movements white, and I'm going to change their degrees so that we can see that they are what they are, right? So we can see that we've got 1, 2, 3, 4, 5 coming down here. Now, why is that important? That's important because we'd have this movement, 1, 2, all of this is a potential 3, then up for 4, then down into 5, right? And then we can start to think about a bounce upwards, because all of this, if I zoom out just a fraction here, the 5 waves that we've got going down on the micro, the bigger 5-wave moves, are all a wave 1 before going up into a wave 2 and then falling down and so forth, right? So what we want to do is we need to reflect on those things. Let me just go ahead and remove this for a second. And what we'll do is we'll focus in on this real micro one, the one that's probably going to finish in a few hours, right? If not, maybe even by the time this video is finished recording. If we take this level here, we can see that we should be aiming for around the 34.77. Let me just go ahead and grab a rectangle here. So if I grab a rectangle and I put it on this one, it's 34.77 to around the 34.71, right? So if I go ahead and delete the fibs, you can kind of see that's where that would end. Now, we have to do a couple of things here. One, if we want to make sure that this is a 5-wave structure, then we're going to want to see ourselves actually come down lower than this. It should be at the 34.62, right? So this is actually going to be our trigger point okay, right here. Okay, so this is really what we're looking for in the sense of making sure that we hit these 5 waves nested movements. So want to be a little bit cautious just to say that, it's possible that actually, we are not quite in where we need to be just yet. And in which case we're going to have to keep a close eye on that, because it does look like this might have to extend down further in order to reach those minimum requirements to make this a bigger 5-wave structure. So we're going to keep an eye on that just to make sure that those things happen, right? Because when it comes to these nested movements, if I go ahead and draw it in again, 1, 2, the wave 3 would have to be at least 34.62 cent before we can then see anything like that. Otherwise, all we're doing here is a zigzag pattern, and a zigzag pattern would just be a short-term corrective move, which is this. Okay, and that would be done. Okay, then we can come back up, and it would potentially mean that this wave 4 is not complete. Okay, so not hitting 34.62 would tell me that we're not going down to our targets just yet. And the higher that wave 4 goes, the lower that our targets go as well. So just kind of bear that in mind. Typically, though, we have kind of met our minimum expectation with that. I would say almost met the minimum expectation. If I go ahead and pull this up here, up to this high right here, yeah, we'll be looking at 35.55 as our typical kind of movement when it comes to fourth waves on this macro. So keeping an eye on that, I think, yeah, it's going to be interesting. At the moment, it looks like actually this low here at 34.71 and 34.77, so minimum expectation of 34.77. If we hit that and we bounce, then it's just a zigzag pattern and I don't have to worry about anything else. But my expectation here would be that we do move down to at least 34.62. Failure to do so just means we have to go up higher before we can come down, and the higher that we do go, the lower that we'll have to go later. So it's kind of one of those, you're kind of just pushing it off until such a later time. Now, we've been oversold on this hourly chart for a while. If I bring this up, you can kind of see it down here. So a bounce to the upside is due, and once we complete that 5th wave, we should be thinking about that. On the 4-hour, we're only just here, so we do have some potential to the downside. 8-hour has plenty of potential to the downside. So does the 12-hour, the 16-hour, the 20-hour. The daily has a lot of progression in either direction, to be fair, and as does the weekly, almost down in this oversold area. So I think we're getting close to these finishing corrective structures, and we're just not there yet. So yeah, got to keep those things in mind, because I do think that we've got to have this move to the downside. Now, anything lower than 30 cent, if we eventually do get there, I mean, even this one at like 31.95 would be a pretty good price, I think. But lower than 30 is really where I think the opportunities lie. So I'm not going to be FOMOing into anything. I think that as a part of this entire structure, aiming for around the kind of 26 to 28 cent is a pretty good deal. So I think that's really where my mind is going to be on the macro level, looking to kind of buy up some XRP at these really good rates down here. But we do have to kind of just be patient, let the structures play the structures out, right? And just let them do what they need to do, okay? Because sometimes you kind of get caught out by feeling the FOMO and you missed opportunities and things like that. But I don't think we're going to miss out on anything necessarily. I just think we've got to be a little bit patient, let time kind of play its course, and eventually we'll get down into these levels. Now, obviously there are some unknown variables such as the Ripple versus SEC. Or SEC versus Ripple, to be more accurate, and that is going to have a positive impact on price, whether they win, lose, draw, settle. None of that stuff really matters. As soon as there is clarity around what XRP is going to be classified as in the UK also and in the US, we should see price appreciation quite massively. So I do think that that's going to happen at some point, probably Q1. So, I still think we've got time here to kind of let it bleed out a little bit. But as time progresses, we do run that risk. So, as I say, anything around the kind of low 30s, it seems like a reasonable deal to me before we can start to see some kind of price appreciation. But at the moment, the structures are telling us that we should be moving down a bit. We are not fully oversold on some of those macro levels like the weekly just yet. The daily, obviously, it's bouncing around a bit. The bigger economic climate is pretty bad for crypto and other kind of stocks and metals and things like that as well. So just kind of bear in mind that there's not a lot of money flowing around from big institutional players or billionaires, and market makers are just looking for liquidity. Retail money is moving the market a bit at the moment, and I think we're going to see retail move the market quite a bit with XRP next year. So just going to be cautious. I do think that 30 cents going to be a really good buy. It might go down lower, of course. So DCA and all that kind of stuff, I think is reasonable expectations to be had. But just bear in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it. I'm going to leave this video right there. So I do hope everyone has a fantastic day. If you have found this useful, informative, smash that like button. I do appreciate that. If you're new to the channel, then why not subscribe? If any of this Elliott Wave theory stuff was a little bit confusing, then why not head over to 𝗕𝗘𝗪𝗀𝗠𝗏𝗏𝗏𝗏, linked in the description below, and check out the Elliott Wave course. It's a 21-part video course that will help you understand the ins and the outs of everything that is going on here when it comes to Elliott Wave theory. Guys, until the next one, have a fantastic day.